Thanks. Sally Woolhouse, Senior Private Sector Advisor at the FCDO, Foreign Commonwealth Development Office. Delighted to welcome today's panel. We have Omar Dare, our Africa Director. We have Ben Ainsley from the Department for Business and Trade, the Deputy Trade Commissioner for Africa. We have Jumai Mohammed, Investment Director, BII, and Hikmet Abdella from FSDA, Africa, Financial Sector Deepening Africa, from the head of the Ethiopia team. So great. So thanks for everybody for attending today. So I'll also ask a few questions of the panel. We'll start with Omar. Be great if you could elaborate on the UK's approach to Africa and what it looks like for the UK to be working in African countries.
Great, thank you. And thank you to the organisers for this conference and to all of you for attending. I think it's a really important moment to be thinking about partnership with Africa, a continent that I think if you are thinking about future world economy, tackling the global problems, exploiting global opportunities, we really do need to be thinking about Africa. And although we're starting from a sort of relatively low base in terms of the percentage that Africa represents of trade with the UK, of global trade, I think what we see is there's really enormous opportunities across the continent for us to do more, for us to think about how our businesses can engage with the continent, because we have really strong fundamentals in the continent, as everybody knows, whether it's the youthful workforce, whether it's opportunities on renewable energies, whether it's vibrant agri-tech and fintech sectors. And those are areas that we really want to lean into and think about how can the UK adapt its approach to working with our African partners to make the most of those opportunities. And since this government has been in office, we have been working on a new approach to Africa, which was commissioned by our previous Foreign Secretary, David Lammy, and we are continuing now. And that has been about thinking about how do we modernize and develop our relationship with our African partners? How do we make the shift from being a donor to an investor? How do we genuinely have mutually beneficial partnerships that help growth in the UK and growth across Africa? And as part of that process, we've had a really long consultation process in the continent, I think across 47 African countries, and back here in the UK, talking to diaspora communities, businesses, others who want to engage in the continent about what we can do better, what we can do differently. And we recently published the results of those consultations. And the message that we kept hearing continually was not really about sort of our traditional development programs that we've had in the past, but was really about the focus on jobs, on growth, and on investment, which fits with the shift that we want to make in this partnership. And we were hearing also some specific challenges that African partners would like us to help them work on, whether it's about value addition and how the UK can help sort of African economies not just be exporting raw materials, but thinking about how you keep more of the value addition on the continent itself. And we're thinking about that in areas like our critical mineral strategy as we move forward. We heard a lot about the challenges of risk and investors from outside the continent finding it too risky or thinking it too risky to do business in the continent. And a lot of our tools, including some that we'll hear about later from BII, thinking about blended finance, are now thinking about what we can do to support that de-risking of the environment. And I think some of that is also links back to our development programming as we think about how do we help provide UK expertise to make the kind of systems change that will help African economies develop. And then we also heard a lot about how can we increase trade across the continent, sort of between African economies, as well as trade back with the UK and elsewhere. And one of the areas that we're particularly focused on there is the African Continental Free Trade Agreement, and we were the first country to sign an MOU to provide support to the Secretariat and to that agreement, because we think in boosting intra-African trade, that will also help us develop UK-Africa trade. And I know we're going to hear some interesting things from FSD, from BII, from DBT about other tools that we have in working with the continent. And then there are many other tools that we have who aren't represented on this panel, whether it's Manufacturing Africa, which also does some of the work on that value addition piece that I was talking about, or UK Export Finance, which can also help British businesses invest and do business in Africa.
Brilliant, thanks. Thanks for elaborating on that. And yeah, and just noting that the very diverse source of capital and the very different ways in which the UK has programs and instruments to support businesses at different stages of their development. So I think we'll definitely hear more about those on this panel now. But good to turn to Ben then. Be great if you could elaborate on a bit more on the trade strategy and what it means for the UK's trade with African countries, and tell us a bit more about what DBT is offering to investors as well as to businesses.
Thanks, Ike. Really helpful, and thanks again for having us at the panel and to the organisers. So I think before we get into the trade strategy in particular, I think it's worth us stepping back and talking through a couple of different strategies because I think they're all really interlinked since government came in just over a year ago or so. So there's the new industrial strategy which sets out where the government and where we want the kind of economy to go over the next sort of 10 years or so, with a key focus on a number of sectors where the UK has a really strong comparative advantage, whether it be the defence sector, financial services sector, or others. There's another really important strategy about the SMEs, which are obviously the absolute lifeblood of the UK economy and the absolute backbone of the UK economy. And that sets out kind of the support for SMEs and where we see the SME kind of agenda going. So another really important piece. The other piece that is yet to come out, is the critical mineral strategy. And I know there's been lots of discussion and other panels this week on that, so perhaps we'll get into this now or maybe not. But I do think that will be an important moment in kind of signalling both to industry and to kind of wider countries and partners about where the UK is going on the critical minerals. And obviously for the African continent, it's absolutely crucial. That then, I guess, brings us to the trade strategy a little bit and what that means. And for a long time, we haven't had a single trade strategy, right? There has not been a single unified direction about where kind of UK government wishes its trade piece to be. So I think it is incredibly powerful to have that in a single place and to have that kind of vision about where we want to go. And I don't doubt, I'm sure you've all read it cover to cover, and it sits on your bookshelf. But just in case you haven't, let me dive into it a little bit, because I think there are a few bits that are really, really kind of important for this agenda. You know, there's lots in there about protecting the multinational system. There's lots in there about relationship with the US, as you would expect, in the European Union, some of our biggest trading partners. But let's talk a little bit about this continent and some bits that I think are really important. At a very basic level, but this is often the way government strategies work, is actually just by being in the strategy is actually really important and sends a really strong message, right? And there's some really strong references to the continent, to kind of the global south. There's some really strong case studies in there about an education in Nigeria work that we've done, as well as some kind of cocoa exports out of Côte d'Ivoire, I think it is. So that actually just at a very basic level sends a really strong message about how we see it. There's a couple of elements in there I think worth us picking up as well. The first is the Developing Country Trading Scheme. So I think this is one of our strongest offers, but if I'm really honest, there's an offer that I don't think is very well known, but by partner countries and in the UK as well. So that gives goods free access, tariff-free, goods-free access across a whole suite of goods back into the UK for exporters from the continent. And we committed in the strategy to make the process even slicker and easier already. And I think there's a big piece for us back in consulates and embassies across the continent to be publicising that more and talking to companies about it. I was at a round table with some Ugandan farmers, exporters, maybe like 6 months ago or so. We were talking exactly about this. There was maybe 15, 20 of them, some of them already exporting into the UK. Not one of them knew about the scheme. And so I think we need to recognise this and hold up our hands and think about doing more. And we've had some good conversations this week with kind of host governments about how can we publicise that more and push that even more. The second piece, which I kind of alluded to already, is in there that is important, is about sort of UK supply chains, and in particular the critical minerals agenda and the food supply chain. And I think we'll see more of that kind of steerage when we get the new critical mineral strategy and the direction that goes. And that, I think that's probably a post-COVID shift as well that we've seen, right? Governments, not just the UK governments, but globally thinking much more about supply chains, whether it be food security, whether it be mineral security, or a whole host of different kind of areas. The final area I sort of wanted to pick up on is what we call the Ricardo Fund that was kind of named in there, which is a significant sum of money in order to help unlock what we could term market access barriers and the market-making space. And I think this is a really powerful offer, and a really powerful offer in a win-win partnership way, to use that really important term, in terms of unlocking barriers, setting the business environment up, setting the markets of the future. And we've already had some really strong success in that space, whether it be helping reform some of the pharmaceutical space in Egypt, whether that be the education space in Mauritius, which has led to some UK companies already kind of taking advantage of that and setting up. Now, there's lots more we want to do and lots more in that space. And a lot of that has to come from industry, I think, back to us, right? There's no point me working or getting the team to work really hard on an agricultural barrier in Gabon, to pick a country, if actually that is not of any use to any kind of UK exporter, right? So I need that intel almost back from UK industry to say, you know what, Ben, team, what would be really helpful actually is that pharmaceutical barrier in Egypt or whatever it might be, and this is the upside and this is the potential we see. So we really see that as kind of a two-way dialogue kind of into this space. I guess then a little bit then to answer your second question, Sally, about kind of what's our offer, what do we do? And some of that we've kind of touched on already. But broadly, our basic setup is that we have teams, commercial officers right across the continent, and we work in, basically I sort of think of it as matchmaking, right? We are there to sort of help match the opportunities with UK supply and UK content. We try and focus down naturally where you would expect where the UK has a comparative advantage, and that is usually linked back into the industrial strategy. So that might be on the sectors that you'd be familiar with, the financial services sectors, the life sciences sectors, the defence sectors in some markets in particular. I think I'm always talk to the team as well about being really honest about what we're not very good at in the UK and what we don't do, and let's not try and compete in that space, right? Or let's think about how perhaps we could be complementary. So infrastructure, I think, is a really good example. We have some of the world's best design, project management, infrastructure companies in the world, right? PMO, absolutely. What are we less good at? Perhaps more of the pouring concrete, the physical building of it. But actually, there's a natural synergy there and a win-win, right? So how do we be smart in that space? We have quite strong SME support as well. That is both kind of a regional hub team that we have on the continent, but also back here in the UK. And a lot of that as well is about helping SMEs understand how to export. Now, I think we should also be really honest about not all African markets are right for SMEs and not all African markets are right for new SMEs. But a lot of what we also do is help educate SMEs. So our Export Academy is a really strong offer about taking new exporters or perhaps exporters who have already done slightly easier markets than exporters do and thinking about, okay, how do I do a more challenging market on my kind of export journey and my life? And we help on that kind of journey from more of an upskilling and kind of piece. And maybe then the final area I'll just touch on is UK Export Finance, which Omar already touched on as well, which I think is a really incredible offer. And I often return to it as just insurance. It's basically just insurance, right? There's a lot of different offers. There's a lot of different products. I suggest we don't sort of get into all 15 of them here and now, but it is a really strong offer. And it is a really competitive offer. And that is the key thing for me. That when we look at some of our competitor nations, they ask 90, 100% in some cases, content from effectively UK or from home market rather. We only ask for 20 minimum. I mean, I'd like it to be 100, but I'm also realistic about obviously global supply chains and how this works, right? And actually what we see that does is that gives real confidence and real certainty to UK suppliers and UK investment in this space. And we've had some really real strong successes in this space, whether it be Angolan airports, whether it be Cameroonian farms and land support there as well. And we've got a whole host of really strong pipeline of hundreds of billions kind of coming down the pipeline about what that looks like for doing even more in that space. So I might pause there, but happy to pick up any more of this or questions as the panel develops.
That's great, and we will take some questions at the end. And thank you, that's really helpful. So you've outlined the position on trade and how we're supporting investors in that regard. We're going to go to a more detailed example now of Ethiopia and look at what the UK has done with relatively small amounts of grant financing, but how this has created opportunities for investors, right? So to Hikmet, thanks for joining. So we'd love to know, and personally, I'm particularly excited about the stock exchange and hearing more about that, the opening of the new stock exchange in Ethiopia. But what support has FSDA had from the UK in Ethiopia? How is it supporting businesses and households? And can you elaborate a little bit on some of the challenges that you faced, especially, you know, we're seeing these big achievements, but they're rarely, you know, I know that there'll be a long run in, there'll be some challenges. And, you know, how is Ethiopia, as a result, a better place to welcome new investors?
Thank you, Sally. I might correct you saying that I'm actually the CEO of FSD Ethiopia. But this is, again, with the support of the UK government. One of the things that we've done, you can't hear me? Hello? Is we were incubated in FSD Africa, based in Kenya, exactly for this reason, that you couldn't have, before the Forex liberalization, you couldn't own a Forex account as a local NGO. So we were incubated with FSDA until recently. We're in the process of actually divorcing from them and having our own entity based in Ethiopia, now that we are allowed to have Forex accounts. So FSD Ethiopia was established with the help of FCDO and Gates Foundation. So the FCDO has been a strategic partner from the beginning that helped us design, implement, and scale reforms in the financial systems in Ethiopia. That included working closely with the Ministry of Finance, the National Bank of Ethiopia, which is the equivalent of Central Bank of Ethiopia, the Capital Markets Authority, the Stock Exchange, as well as the two pension funds, the private and public one. So we helped to build the architecture for transparent and inclusive markets in all these institutions. So I think it's a very good example on how UK technical assistance actually helped from policy ambitions to perhaps really institutional capacity within all these institutions that I mentioned. So through FSD Africa, the money was channeled from FCDO. So beyond the regulatory foundations that we have created, we help actually product innovation and market readiness, including the feasibility studies of green bonds, sukuk, and municipality bonds, and the creation of a card investment platform within the stock exchange. We've also created, helped support capacity building efforts, such as the AFSIC Academy, which has trained over 13,000 trainees within a short, limited time. So I think together with all these, we've established the groundwork for transparent and predictable and perhaps inclusive capital markets within Ethiopia, from zero to where we are now. So you asked me about perhaps challenges in this. Our biggest challenge from the beginning was actually synchronizing the policy reforms that were happening very, very fast with the market readiness that we see in Ethiopia. Mm-hmm. So be it the market players, be it the regulatory and the players in the market. As you know, Ethiopia has been closed in the economy for the past 50 years, like since the creation of private sector. So it was very, very difficult, although the policies came very quickly. Sometimes even to us that are based locally, the reforms happened very quickly. Sometimes we can't catch up with the reforms, let alone the market players who've had perhaps no exposure to international markets and no competencies or the skills that are necessary. So it was hard for them to keep up with the reforms and actually be ready in terms of the skill set. So that's the biggest challenge for us. But we've, with the long-term engagement with these entities, I think we've done well in perhaps allowing building capacity institutionally and with individuals to help do that. So I think you mentioned also, you said what was the opportunities perhaps for UK partnership going forward. Although there were challenges at the beginning, the market ecosystem is quickly catching up. So I think there's a lot of room for UK partnership to come in as partners with the legal, as advisories, as transactional advisories, and perhaps structure some of the investments and so on. And I think if some of you that were there in our country summit yesterday, the DG of Capital Markets were saying that a lot of people think that Ethiopia is still closed, and that's something that we need to change in terms of our narrative. But it's open, like any foreign firms can come, any banks can come as greenfield or as partners with the local banks operating at the moment. So it's created a lot of opportunities for perhaps foreign investors coming in now. And I'll come back, I think, from questions from the audience.
We'll welcome questions at the end.
Yeah.
Thank you. Thanks for elaborating on that. So we'll go now to Jumai from BII, and thank you for standing in at last minute for your colleague who's been taken ill. But we'd love to hear more about the innovative financing that you guys are doing and the ways in which you're evolving in that way, and in particular how it's resulted in the mobilization of more sources of capital. But we're also interested to hear about your gender lens investing and the different ways in which you're encouraging more gender lens investing generally.
Absolutely.
Thanks.
Thank you very much, Sally, and really good to be here. I think maybe just to start off with a brief introduction of BII, because we've talked a lot about UK partnership. BII, the British International Investment, is one of those UK engines, which is essentially the oldest development finance institution today. It's 77 years old, and we've been investing in Africa for that long. I think it's important to also note that, we sit with a dual mandate. We invest in private sector for both commercial returns, but also demonstrating impact. Impact is very much embedded in every single transaction that we do on the continent. I think the way we also invest in terms of just going in and supporting businesses directly with our investments, but also working with intermediaries who have reach or may bring the sort of technical expertise, market knowledge that we may not always be able to. If I think of just coming back to your question on innovative finance, I think there's a lot of excitement that I have around many areas that we've worked on, but I think maybe just sticking to the theme of just what we're seeing that supports mobilization. I'll give a few examples. One is our Growth Investment Partners, which is essentially a platform that we've built for funding local currency, getting local currency long-term financing to SMEs on the continent. We've done this now in Zambia and Ghana. I think what's most important about this is that it is addressing the core needs of these SMEs. It is the fact that because of their scale, they're unable to get long-term funding. They're also able to get funding that matches the currency of their risks that they sit on. So we've tried not to go at this alone. We've been working on how we can bring local pension funds into, going beyond just investing in treasuries, but now into these sort of businesses. And very related to this is the work we've been doing on capital markets development as well. For, of course, those that that are very familiar with the global trends, with higher global risks is also higher interest rates, especially because of the high risk perception around Africa. We're very keen to change that risk perception because we've been investing 77 years and we have a very strong portfolio of businesses that have grown significantly in this time. We've gone from government partnerships to now businesses, banks, manufacturers standing on their own and being very profitable entities. So we have a lot to share here by, particularly in the development of debt capital markets, where we're helping to support bond issuers on the continent to raise local currency in their market by giving our own anchor commitment. Before the investors come in, we probably would have committed 30% into these bonds and communicate our support and lend our credibility to the issuance. I know NMB is in the room, so they've issued one of the largest sustainability bond on the continent, and I think part of the great stories around this is the fact that it's now dual listed on the London Stock Exchange. I think another initiative worth mentioning is our Africa Resilience Investment Accelerator, ARIA, we call it ARIA, and you would have heard a lot about that already. I think it's also another way to reach the most fragile countries on the continent. There are about 7 countries covered, and we've invested around 800 million. I know we're running out of time,
we've got 10
but
minutes to go, so you carry on, and then we'll take questions.
perfect. Okay. Maybe just quickly to touch on broadly the thinking around mobilization for us. It's important to, again, as I mentioned, change the perception around risk, but also ensure that the DFI approach of, buy and hold, commits proprietary patient capital needs to sort of move to actually now getting local funds into the sort of structures that we back so that they can scale and be sustainable over time. So we are doing this a lot around climate financing. We're using our blended finance capital with support from our shareholder to essentially bring in flexible capital structures and address key gaps like currency, tenors, perception around risk. And this is something we're going to look to do more of. We want really, in our ambition is for every $1 we bring, there is $5 of private capital to support that. And I'll finish very quickly on gender financing. This is, again, another key area for BI. Inclusion is very much within our corporate objective, and gender is a big piece of this. I think the ways that we've supported is essentially to use our voice as one of the founding members of the 2X Global to essentially move from mobilizing DFIs into financing gender, but now broadening that to global fund managers, pension funds, and the rest. So we now have a very global focus in terms of 2X criteria. We're helping to build the frameworks that are available for recognizing gender financing. We've piloted ourselves a gender-directed lending product, which helps to support women. I'll give a very good example here where in northern Nigeria, we've supported one of the local banks to reach women who are in agriculture, who are, it's a big space for SMEs in the market, and we see an opportunity to do this. I think for us, the next vision is to, again, challenge ourselves even more and, beyond working with partners, but see how we can also go beyond just recognizing gender balance on management and leadership to now driving more sort of products and services consumption, being innovative in terms of the sort of products that we develop for gender financing in the market. I'll pause here because I would like to leave some time for questions.
Thanks, that's great. We'll go to the room for questions, but I'll come back to you with my own about strategy going forward if we don't get any from the room. We'd love to take questions. Thanks. There's one lady over here.
Thank you very much for the informative discussions. My name is Yvonne Zulu. I'm from the Zambia High Commission. I'm First Secretary Trade. The discussions have been very informative and so many lessons to draw from. But mine is more of a comment than a question regarding the Developing Countries Trading Scheme. I think it's not just about publicizing the scheme with the embassies, but also more of creating awareness around it. I'm happy to make mention that working with colleagues from the FCDO and Department of Business and Trade, we've engaged them to carry out a sensitization session for Zambian exporters, just to create awareness on the practical, guidance and steps they may need to take in terms of utilizing this scheme, because I know there's been some underutilization of the scheme. So maybe perhaps to address some of these issues, I think awareness is very critical. Thank you very much.
Would you like to respond?
I think my short response is yes. I completely agree, right? And I think there's much more we can do. And I think it's about doing it, as you say, in partnership. And I think also on our side, on the government side, UK government side, I think it's about us also helping bring in different elements, different departments, right? So if it's helpful to bring in our agricultural department in order to have a conversation about sort of SPS barriers and what that means for exporters or importers, into the UK, then I think that's sort of a brokerage and facilitation role we can also play.
Thanks. I'll ask a question then. We've got a couple of minutes. How would you like to see BII strategy evolve, and if there's anything that anyone else on the panel would like to say about that? But then also congratulations on the establishment of FSDA Ethiopia. And do you want to tell us more about your future ambition in that regard? I don't mind which way around we take these.
Maybe just starting off on how I would personally like to see BI evolve. I've talked a lot about mobilization. I think diversifying the investor base that is available for Africa is key. I think we want to continue to play a first mover role in a lot of markets. So I think there's an opportunity to double down on some of the more fragile African countries. We've talked a lot about the development in Ethiopia, and we did the first DFI facility in Ethiopia with Dashen Bank just at the time that the market opened up. And I think there's a lot of more opportunities to be a first mover, but also work with partners in market.
Yeah, I can build on that. I think in terms of Ethiopia and its perception, it's no longer a potential market. I think it's been perceived as a potential market for many, many years. But actually, it's heading towards a functional investor-ready market. And I think with the help of the UK, we've really established the groundwork in terms of regulatory and the support that's needed at that level. So I would like that translated into actual transactions in business. And perhaps, the support, and the ecosystem is maturing as quickly as the reforms. So I would like to see UK companies come in and support as partners with the regulators, with the banks, with the intermediaries. They are coming in very quickly.
Thank you. And then just to Ben and Omar for any final remarks, if you want to say. Oh, we've got another question. Oh, great.
Hi, I've got a question for this very distinguished panel. Several years ago, before you were called BII and all these other names, I remember Lord Malloch Brown, who had responsibilities very similar to yours, saying that England was fundamentally, or Great Britain was fundamentally flawed in Africa. Whatever it was doing, it was the wrong thing. Whether it was investing, it was exploiting. Whether it was giving, it was, aid, was trade. Whatever you did, it was going to be flawed. Whereas China, which is to some extent a gorilla in the room, had a flawless record in Africa. It had never gone into Africa finger wagging. I have heard very little over these last few days, 2 days, about China, and I'd just like to ask the panel, wherever I go in Africa, I find China, it's all about China. And China, friend or foe, is my question.
I don't mind.
There's another question. Maybe
I can come back on that question. First, thank you for the distinguished comment. You compared me to Lord Malloch Brown. He was a minister. I'm not. I don't want to take a promotion on that. But I think you ask an interesting question, starting from the point of, trade, aid, all the different things that we're trying to do. And I think our new approach to Africa is precisely trying to think about those areas of mutual benefit. And that's about thinking about where do we work together on things that help the UK economy grow, that help the African economy grow, and about having a conversation of equals. When David Lammy sort of set this up, what he talked a lot about was moving from a sort of patrimonial approach to one that is more a dialogue of equals. And that's not to deny or forget about things that have happened in the past or roles that we've played, but to be very future looking. And I think that's the partnership that our African partners want. That's the partnership that we want. And so I wouldn't simplify it on China to sort of a friend or foe question, because what we hear from our African partners is they don't want to have a partner of choice, which is just one partner that they'll work with. They want to have a choice of partners, and we as the UK want to play our part in that discussion. And I think we have very a very broad range of areas where we can be an important partner, whether that's on the financial sector, whether that's on systems change, whether that's on strengthening the economies, whether it's on bringing in British expertise to those. And China will have its offer, other countries will have theirs. So I don't see it in that simple approach, but I think it's finding where the win-wins are and where we can generate benefit for both our own country and for African partners.
And I would just to add to that as well, what I would say when I talk to sort of host governments as well and African partners is the appetite for what the UK can bring, whether it be ESG standards, whether it be the Bribery Act, is actually really strong, and I think much stronger than we often give credit and talk about. And I can think of numerous actually companies, not UK companies, but third country companies, let's call them, who have set up in the UK in order to access the African market, so they are intentionally caught by things like the Bribery Act. And that is a really strong offer, right? A strong offer that we have as the UK, and actually shows the appetite for that from our kind of African partners at the same time, in order to increase kind of standards, transparency, and all these things that are really, really important. And I think UK companies are really good at this, and we should be proud of that.
Thank you. That was a great question. Thanks. Did you want to say anything to close?
I just, when I think about kind of questions of global politics, global economics, there are often lots of answers. When I think about Africa's role in the global economy, it seems to me there's only one answer, that it has to expand and that it will expand. I see no other future than that when we think about the resources on the continent, the population on the continent, the dynamism of the countries and the economies there. But I think then it's the responsibility of all of us, governments like the UK, our companies, to think about how do we build those opportunities, raising the awareness, building in de-risking, helping to support that investment into the continent. But then there's also responsibility on the continent to build the right sorts of systems to tackle corruption, to have the right sort of legal frameworks that enable and encourage our companies to invest. So I think as long as we're all working together to that goal, then the eventual answer is going to be the right one.
Thank you. With that, we'll close. Thank you to the panelists for your participation.